Hi, everybody. Andy Cruz here in business development. And of course, I have with me
Will Flores with Mortgage Heroes.
All right, so today we're going to talk about a recent loan scenario that was important for us to kind of explain a little of the details about and also educate people that are watching this a little more about how they can improve their purchase price approval amount. So tell me about what recently happened, the scenario, and what are some of the details about that?
Well, Andy, today it's more important than ever to start paying attention to the debts shown on your credit liabilities on the credit report.
So what is it that happened in this situation that went kind of overlooked and you were able to kind of discover and go, wait a minute, we should talk about this thing here?
You know, the crazy thing about it was a client came to us asking for a second opinion is what it was. It's how it started. Hey, I recently just got approved for a new home purchase for $550,000 with $40,000 down payment.
Okay.
So she's like, well, I only have about $55,000. That's going to exhaust all my down payment and closing costs. So what do I do?
Right.
So she says that if that's going to be the case, I might as well just not look right now. It's probably not the right time.
So her initial opinion was kind of want a second opinion. Here's what I already got. And if this is what it is, then I'm going to just back out altogether.
That's exactly right.
Okay. So that's where you're starting from.
Yes. And so the great thing about it was because we understand, been in this industry, 16 years now. I can't believe I'm even saying that, but 16 years. Took a look at the credit report. We found several things. One of them, the major one, was she had a vehicle that was going to be paid off in the last 8 months.
Okay. Oh, so 8 months from now, it was going to be like zeroed out.
Exactly. Okay. And so it just hit me right in the face right away because I saw, well, they owe like $3,000 some dollars, and the car payment was $500 some dollars. So, you do your calculations, about 7-8 months left on that.
Yeah.
I'm not a mathematician, but that's what it equated to.
Tools, we have tools for.
Yeah. And the beauty about that, we were able to omit that.
Okay. Okay. So because it was less than 12 months
10
of
months.
payments left, less than 10 months of payments left, then it got to be omitted from the debt calculation.
That's correct. So we're able to omit it. I don't have to have the client pay it off or anything. We just omit it as if that debt doesn't exist.
Got it.
The only other requirement would be that they have sufficient funds as a reserve account for it, in which they do.
In this case, they did. She had the $55,000.
That's correct.
Whatever. Yeah, okay.
The other situation that happens a lot are student deferred payments.
Oh, for student loans.
For student loans, correct. So anytime you have student loans that are being deferred, there is a formula that you have to utilize.
Okay.
And most loan officers don't know how to utilize it. They have a certain calculation. Well, we managed to calculate that properly, which was great. The other thing that we managed to identify was duplicate accounts.
On the credit.
Yes, very common that Navy Federal will report to TransUnion and Equifax.
Okay.
And then they'll put below the same debt with Experian.
So they separate them.
That's correct.
Oh, I didn't know that.
Yeah, so you have to go in there. You have to really pay attention to the liabilities that are showing on the credit report. Well, in this case, all we did was omit that, and we identified a way better result for the client.
So when they came to you, these things were not known, and then you started digging and you found them out, and then you're able to omit not only the duplicate, the Navy Federal amount that was paid every month, and then also the car loan could be omitted because it's going to be paid off. So those two things alone already, what'd that do to their debt ratio?
Well, long story short, this was a win-win situation for not just the client, but for Mortgage Heroes. Okay. We managed to get them approved for $585,000, $35,000 more.
Instead of the $550, right?
Exactly. Yeah. Instead of the $550.
Wow.
And the down payment was only 3.5% down because they were using FHA financing.
Got it.
So their down payment now is, I want to say, $19,000.
Yeah, 19 and change.
Yeah. So now they have more money for covering closing costs, and if they need to get in there, well.
So she still had her $55,000 of assets, but because you're able to omit the liability parts that we talked about, the amount she could totally get approved for was $585,000, so $35,000 higher.
Yeah.
And then the down payment would be less because instead of doing 5% with FHA, she could do only 3%. She only needed to do 3.5%.
Yeah.
And I bet the reason they had to do the 5 at the first The first approval
it wasn't 5, Andy.
Counting the debts.
I'm not a mathematician.
Oh, no, you're
it's
right.
more like 7%.
Like 7%. Yeah, you're right.
Yeah, so it's more like 7%,
It was
40,000.
Yeah.
That's correct.
Yeah.
So that's why it's so important right now to really start paying attention to all the details.
Yeah.
Especially with interest rates rising.
Yeah.
We want to make sure we're looking at all of that.
Yeah.
You know?
Yep.
I know it doesn't cost you a penny to get an answer, right? But it can cost you thousands.
For not asking. Yeah. Yeah.
Right? Yeah. So that's our goal, is just want to make sure that we're paying attention. And if you find, or any of our clients find themselves in this situation, well, these are some of the things to look for.
Yeah, that's a good story. I like that because I think especially right now when the market is still perceivably tight, and people are seeing house prices at the level they're at. They're seeing rates go up and like kind of zigzagging all over the place. I think that's discouraging to some people. But I think we have, coupling with that, I think inventory coming back a little bit is going to be helpful for people.
Yes.
And with the inventory coming back, being able to change your loan scenario in the way you're talking about, it actually gives people more options than they knew about at first glance. And that's why the second opinion is important.
Options are great, right?
Well, yeah, especially in this case because it's less down payment. They are actually debt load or debt to income ratio actually does afford them to be able to buy more, which gives them more buying selection with the inventory that's there. So it's like this perfect little ball of scenario here.
Yeah. And so, I say we all like options because that's just what we like, even in just general with any other things.
Yeah.
The more options we have, the better things are.
Yeah. Well, this is a good story. I think people are liking hearing about these things because, again, unless we share this, a lot of people don't know about them, right?
That's
and
correct.
Then a lot of times people may be dealing with a situation. I talk about this in Monday Mortgage Minute all the time. Sometimes people are in a situation that they think that we've never seen before, but we've seen before. So it's important for us to share these things with you because you don't know the amount of hundreds of files where we've seen a situation or had to do something like this that maybe just because you're not aware of it doesn't mean that we aren't, but we might have a solution that would help you.
Yeah. So again, it was a win-win. Client was excited. They were motivated because they saw that, hey, now it kind of puts me in a different price range where I know to some of us, 35,000 seems like, well, it shouldn't be much, but they're actually buying, in the Sacramento area and some of the areas where, the median sales price of a home is going to be more like 550, 600,000. So that really motivated them. And for me, just to see how grateful they were because they were able to get approved for $35,000 more. They were able to put less money down. So they really visualize themselves being in this home and saying, hey, I may need some pain. I need to not get in debt with no furniture. So they have a little more of a cushion to be able to cover their down payment, their closing costs, and possibly, I don't know, a new baby crib.
Yeah, a new crib and some new paint. Yeah.
So that's what we wanted to share with you, and I just want to make sure that, we're always being, I want to make sure we're always educating.
Yeah, absolutely.
Our clients. Education is huge.
Yeah, and that's a good point. So as we continue this series, Memo and I talking about what's changing in the market, some different scenarios, we're hoping that you're learning something here. But also, if this applies to you directly, of course, reach out to William. And then also, if you are aware of someone who might be facing a situation like this, you happen to know them, forward this message, send this to them, put them in contact with William, let them know how he can help them with their situation so they can win in real estate and mortgage in 2022.
The biggest compliment and reward would be if you have any friends, family that are looking, for any type of advice, we want to make sure that we can point them in the right direction.
Yeah.
Again, it doesn't cost you a penny, but it can cost you thousands.
Yeah.
If you don't know what direction to go into.
That's right.
Right. So, and
let's
not forget, where there's a will, Andy.
Where there's a will, there's a way.
I'm just saying. Okay.
Well, thank you for sharing that story with us today. We're going to be back again next week with some more mortgage insights, another story for you. Thanks for watching. Send this video to a friend. We'll see you next time.
Bye. And thank you guys for your time.